Let's take this matter up with Glen Wood, head of sales global at Mitsubishi UFJ Morgan Stanley Securities, also live out of Tokyo. Glen, let me put you on the spot here. When, then, will the economy be strong enough to absorb and handle a hike in the sales tax?
Hi, Sri. It's good to see you again. It comes back, I think, to sentiment at the end of the day. The Japanese economy is still the third largest economy in the world. You cannot just turn a huge economy around like that overnight. It takes time. Sentiment shifting, yes, it's shifting, but it takes time. If you go and raise taxes by a large margin as the economy is just starting to turn around and as you're getting away from a deflationary spiral, there is a risk of going back. And that's something I think that Abe and the government's very aware of, and they're very cognizant that that's not what they want to do at this point. They want to provide every stimulus and every force they can to get the economy to move forward. So I think it is a very sensitive issue. The economy, I think, is fine. It can handle it. But will they decide to go forward? I'd personally rather see them go in smaller steps. I think Honda mentioned maybe 1% a year rather than sudden jumps. I think that may be a better scenario than what they're currently thinking.
Glen, then, is the barometer for sentiment, as you point out, the equity market?
Well, I think sentiment, there's a lot of things you can look at to measure sentiment, whether it's spending or whether it's corporate spending, whether it's wage increases. I think there's a lot of things that directly impact sentiment. The market is certainly very important. We've seen the retail investors being very active in this market over the past 6 to 12 months, and I think they're very aware of what's going on in the market. So it is an important indicator, I think, Cowdy.
When you say that your preference is for a slightly smaller increment in the sales tax, wouldn't that be a fairly time-consuming exercise? And what kind of position would it put the Bank of Japan in?
Well, I think the Bank of Japan, Kuroda, has said that they should go ahead with the tax increases, and I think from their perspective, you know, he's definitely said they're going to do whatever it takes to get Japan out of deflation and moving towards inflation. On the other hand, you've got pressure from the outside, from the IMF and whatnot, saying that, you know, you've got a JGB crisis looming, and if you don't start to raise revenues, that the country's going to be in trouble. So I think from Kuroda's perspective, I think he'd probably prefer a more aggressive hike in consumption tax. And I think from Abe's perspective, he'd rather push it out further or raise it very gradually. And I think they'll probably come to a compromise somewhere in between there would be my guess.
Glen, you put it all together. What are you telling clients and investors? On balance, should we be staying invested in the Japanese markets? And what's needed to give the Nikkei and the topics their next leg up, especially when you consider that dollar-yen is now back squarely below 100?
Right. So it's a great question, Sri. And again, I go back to what I said earlier, that, you know, Japan is a huge economy. Things have been relatively in negative growth mode for 20 years. To turn that around is momentous. It's a paradigm shift. It's revolutionary for Japan. Is it happening? Absolutely. Is it going to happen in the terms that investors want it to happen in? Is it going to happen fast enough for investors? Probably not, and that's where we're going to get the volatility. That said, absolutely, I would be invested in Japan today. On a 12-month view, my personal view, as I said before in this program, I think we're going to 20,000 in the short term, and I think the yen is set to weaken further. And you're going to see earnings, again, probably double when we look back a year from now.
All right. Stay invested in the market. 20,000 by the end of the year, Glen. Is that correct?
I use a 12-month horizon, but again, in general terms, we're headed in a very positive direction. Things are changing. It's not happening as fast as perhaps some investors would want it to happen, but I think fundamental investors are taking a very good look at what's going on, and plans are going to be revealed over the coming months that, I think, will take people by surprise.
Very quickly, you like Nikon. Why?
Nikon is a great global brand, Sri. I think there's no one on the planet that doesn't recognize Nikon, and the value that it's trading at today after an earnings miss last week, I think, frankly, is just below where it should be. I think you've got not only cameras, but you've got a stepper business. You've got a company that a few years ago restructured its whole management program, its whole way of hiring and firing people. It's a company that is much more shareholder friendly than it was 10 years ago, and it's focused on returning money to shareholders, and I wouldn't hesitate in investing in it today.
Glenn, good to know.